Hey guys, today I'm gonna be talking about inverse fair value gaps and two ways that you can use them to help you trade and be profitable or help you trade and just improve your strategy as a whole. So I marked out a couple of examples beforehand so that we don't have to like search for each valid inverse fair value gaps. But I do want to say not every 1 minute inverse means um that is the okay, not every inverse is the one that you should be looking at. Inverse or everything like any confluence that you have on your strategy should be based off key points of price. And by key points of price, I am talking about liquidity. Liquidity is the liquidity is what it's the first confluence that you should ever have because liquidity will tell you what the markets want to do, especially when you're grabbing price from liquidity. It may follow the same order flow or may go against it. And by going against it is when we can finally find our inverse value gaps, breakup structures for rally gaps that can help us find the direction of the new structure that can help us find a better trade and make us win trades. So I marked out a couple of inverse fair value gaps on key points, not hourly highs and lows, but just like highs and lows on lower time frames that happened on Friday, a day that I didn't trade because there were a lot of news. But it works well enough so that you guys can apply this to your strategy or just learn a new concept overall and tweak it and add it however you want. So if we go down to the 1 minute with our first example, it's this inverse right on here. So inverse fair value gaps, obviously, it's just the opposite of regular fair value gap. Now, the thing is, you can use it up to two options. I normally use it as a break of structure to tell me that we're going into another trend, or you can use it as an entry in a way, but you have to tweak your model because every inverse price usually goes back down unless you grab the unless you go straight up in a line, which is less probable. But if you do that, you can find like internal liquidity like right around here in this line. Take your first profit over there, break even, you got money, and if price goes along to your direction to like this highs, then that's perfect. But if it goes back to break even, then you're safe with first take profit hit and basically zero money lost. But if you lose, this is more like a high win rate, low type of risk type of trade. And a lot of break evens if you use it that way instead of like a break of structure. But if we use it like this, we can see that we're in a low, we reacted, we have this for value gap, which we kind of invalidated, but we're just respecting this like respecting this like order block. But we have a this works in two ways. We have an inverse Pirelli app that you can just put this enter here, for example, lows below here. Internal liquidity. Wait, internal liquidity right here. Take your profits there and then leave the rest. Leave the rest of your contracts to like a higher high and break even. But this, if we would have entered right here, we would have like break even because of this candle after taking our internal liquidity. But if we use inverse fair value gaps as a break of structure and then following it up with another confluence, a fair value gap, what we can do is we can take this for value gap, say, hey, we broke structure because the inverse, not one, but two. And additionally, Um, we filled this for value gap with this black candle. Well, not black candle, my bad. This is, sorry. We filled this with this candle perfectly and reacted strong. And usually I'd say wait for a black candle to fill in and then continuation candle making it green to enter. But since we had an inverse not once but twice, we can say, hey, price is pretty bullish, so we can enter right around here with our lows right here. and aiming for hourly highs, which would probably be around here, if I'm correct. So that's one way you can use it. Now, using our another example is after all that shenanigan happened, and we go back to fill this and make this for rally gap, make our resistance hold. What we can see is that we had this black candle going down to retest it, and we had this candle inversing this for rally gap, also creating a BPR, which we still have a new bullish for rally gap, but um looking at context, we're still holding off this for rally gap, and then we have an inverse saying like, hey, we still want to go up. That's a brick of structure. You can enter off this candle, low stop loss below your inverse for valley gap, hourly highs, and when you take internal liquidity, let's say right around here, that's another point of liquidity, you can just break even and leave the rest, and you took profits, and you took full profits technically at the second, and price never went back down to break even your trade. But that's a safer way to use inverse for valley gaps. Now let's go and look for another example that I marked out. As we can see here, we probably let me put a box to see on the hourly or higher time frame what exactly price wanted to do. Yeah, so here what we wanted to do is uh this probably took an hourly low from a previous session. I'm not gonna go back fully because if I go back fully, we're gonna be in October of 2024. Because price is in 19K. But if we go to the 1 minute there, where is it? If we go to the 1 minute there, what we can say is like, hey, we took liquidity at key point where price probably wants to reverse. We have an inverse for value gap. Hey, you know what? Let's enter here. Stop loss below the. Can I move this, please? Thank you. Stop loss here, or stop loss right around here if you want to have greater if you want to have a higher risk to reward, internal liquidity, right when you touch this, say, hey, I'm going back to break even because I already took my first take profit, and then leave the rest for higher profits. My bad. Leave the rest for higher profits while you're already break even, and hey, you won money, you took your first contracts, you trimmed, and then the price wanted to go to your break even point. But hey, even though this could have it could have gone lower, and if we didn't make this, you could have lost money, but it didn't, and you took your full trade, and it basically made you win money in a safer way. But risking this, in my opinion, I would risk lower if I would only be using inverse Fair Value gaps as my model. But just for today's video, I am using this as an example of how inverse Fair Value gaps can help you um see and react what the market wants to do, especially when it's reacted in key levels of liquidity in the market. And once you like learn how to identify this key levels, it's like the market becomes easier to react. So in my opinion, I prefer to use inverse for value gaps as breakup structures, because if I use them as breakup structures and then enter above for value gap and then a reaction of that for value gap or equilibrium, I usually can target higher highs, and I won't have to worry about taking internal liquidity and then having to put my stop loss at break even. But I can just leave my stop loss and leave my trade to the hourly highs, and I can just take 2 to 3 RR normally and casually. But I'll talk that in another video where I'll be explaining more my strategy. But this is just one single confluence that I wanted to talk about that could improve your trade and kind of teach you how you could see them instead of like, hey, like it just invalidated. It's bound to move up indefinitely. No, that's not right. Usually if an inverse happens at a key level of liquidity, what's gonna happen is that a internal level of liquidity that's usually not a 1 RR, by the way. That's depending on how your risk to reward. But if you put it below the inverse, it's usually not a 1 RR, it's usually like a point 0.6, point 0.5. But usually it's gonna target that internal point of liquidity, which then you can break even and then you're risk free. But that's just one confluence, and you can make your whole model and strategy revolving around that. But I just wanted to teach you and hopefully make things clear on that little confluence. If you have any questions, put them down on the comment section below. Thank you for watching and have a good day.